Drenad Trust here. So the Tesla stock is doing bonkers right now, right? It is literally escalating to new heights. And I'm in this video, I'm going to discuss the driving factors that's causing the Tesla stock to go crazy right now. So let's start with the robo taxi, right? And the news of it. So robo taxi is basically a major catalyst in this regard, right? Tesla stock has seen a notable rebound and upward momentum in June 2025, with a significant driver being the investor anticipation around the imminent launch of its robo-taxi service in Austin, Texas. So the company is reportedly targeting a June 12th start date for this autonomous ride-hailing program, which is seen as a transformative step for Tesla and the broader autonomous vehicle industry. Now, but what about robotaxi is causing this, right? So basically, investors are saying that there's an anticipation of new revenue streams. So investors are bullish on robotaxi program because it represents a potentially new high margin business line for Tesla, leveraging its self-driving technology and, basically being able to compete with established players like Waymo. So this could significantly expand Tesla's total addressable market and future earnings potential. There's the restored focus from leadership. So CEO Elon Musk renewed focus on Tesla following his departure from a government advisory role, and is viewed positively, right? Investors expect Musk to drive the robotaxi initiative forward, increasing confidence in the company's execution and innovation. There's market sentiment and technical factors. So after a volatile period marked by political distractions and stock price declines, the robo-taxi news has provided a much needed positive catalyst. The stock rebounded nearly 4% on Friday after previous declines, and the prospect of a successful robo-taxi launch is encouraging both retail and institutional investors to re-enter and add to their positions. There is analysts and industry optimism too, right? Analysts see the robotaxi launch as the beginning of a golden age for Tesla's autonomy ambitions, with the Austin trial serving as a critical proof point. So if successful, it could pave the way for rapid expansion and further stock appreciation. Now, one of the things that's also reportedly driving this stock up through the roof is this Elon Musk versus President debacle that's going on, right? So Musk and President Trump, basically early this month, had a pronounced negative impact on Tesla stock. The dispute began when Musk, after leaving his role in the Trump administration, publicly criticized. He said, I don't like that bill, right? That major spending bill that was basically supported by Trump. So this escalated into a heated exchange on social media, with Trump threatening to cut government contracts with Musk's, companies, basically like SpaceX, Tesla. So on June 5th, 2025, the fallout from this feud triggered a dramatic 14% plunge in Tesla's share price, erasing over 150 billion in market capitalization in a single day, the largest one-day loss in the company's history. The drop reflected investor fears that Musk's deteriorating relationship with President, could basically jeopardize Tesla's access to federal incentives, regulatory support, and government contracts, all of which are critical to the company's financial health and future growth prospects, right? There is broader investor and analyst response. So there is kind of like a confliction. So yes, it's performing well, is doing great numbers, whatever, but Baird has downgraded Tesla stock. So there is some volatility that's happening now. So, and I'm going to talk about this a little later, but in a nutshell, analysts at Baird downgraded Tesla stocks from buy to neutral, citing the feud as an example of key person risk tied to Musk's basically political activities, and warning that the spat had caused brain and brand damage and added uncertainty to Tesla's outlook. So concerns were raised that Trump's administration might basically retaliate by removing electric vehicle tax incentives, cutting subsidies from battery production, and introducing new fees targeting EV owners, moves that would directly hurt Tesla's US sales and profitability. So the feud also exacerbated existing challenges for Tesla, including declining sales, rising competition from China, and skepticism about the profitability of its upcoming robotaxi business. Now, remember, there's a lot that's going on right now, right? There's a lot that's going on. So, in one hand, Tesla's doing good, but Argus Research and Baird, they're not having it, right? So basically, June 9, 2025, Argus Research and Baird downgraded Tesla stock, citing heightened uncertainty linked to CEO Elon Musk's public dispute with former President Donald Trump and broader concerns about political risk and demand for electric vehicles. So here is what Argus is saying on their side, right? Argus, led by analyst Bill Selesky, which is probably not on Elon Musk's favorite friend list right now, downgraded Tesla from buy to hold. The downgrade was driven by concerns over the ongoing public spat, between Musk and Trump, as well as the, expiration of EV incentives, which would further diminish demand for new Tesla cells, right? So Selesky stated, "We are worried about, the back and forth between President Trump and Elon Musk, alongside the expiration of EV incentives that may further diminish demand for new Teslas, but maintained a positive long-term view on the company." Now that's Argus. Baird, they said, "No, we want some of this smoke too. Argus, we get you, but here's why we saying no, right?" So Baird analyst Penn Kalo, which is probably also not on Trump's favorite list, also downgraded Tesla from outperform to neutral. So Kalo cited the recent Musk-Trump altercation as highlighting the key person risk associated with Musk's political activities, which introduces additional uncertainty to Tesla's outlook. The analyst noted that Musk's close ties with government policy are a double-edged sword, right? Double-edged sword, and the recent events have underscored potential negative consequences for the brand. Now, there is a market context and analyst consensus that also plays a factor in this stock. So the downgrades come as Tesla shares have dropped about 27% in 2025, making it the weakest performer among the so-called Magnificent Seven stocks. Despite the downgrades, both firms indicated that Tesla remains a preferred long-term holding, but see the current environment as too uncertain for a bullish stance. So as of the downgrade, consensus among analysts tracked by Visible Alpha was 10 buy, 4 hold, and 4 sell ratings, with an average price target around $304, suggesting limited upside from current levels. Now here are the upcoming catalysts, right? Again, we talked about Argus and Baird highlighted Tesla's upcoming robo-taxi trials in Austin, Texas as potential long-term catalysts, though short-term uncertainty persists. So that's certain things that you want to look for. Now, did a little digging, did a little searching. Now, if you are interested in the Tesla stock, here is what analysts are saying as what you can expect for Q3 of 2025. So analysts have recently recalibrated growth expectations for Tesla in 2025. Revenue and EPS estimates for the full year have been revised downward due to weaker than expected deliveries and margin compression. So as of early June 2025, revenue is forecast at $106.7 billion, which is up 9.4% year over year, with EPS at $2.55, which is up from 4.6% year over year, both significantly lower than estimates at the start of the year, right? They didn't know that Elon Musk and Donald Trump was going to throw them hands, right? So Q2 2025, we're almost done with it, but is expected to mark the bottom in revenue growth, with analysts forecasting a reacceleration in the back half of the year, including Q3 and Q4. So revenue growth is projected to improve to 14.3% year over year by the end of 2025, with even stronger acceleration expected in early 2026. So EPS growth is expected to remain volatile in 2025, with a more pronounced rebound anticipated in 2026. So production, deliveries, and market factors, Tesla aims to ramp up production to 2.5 million vehicles in 2025, supported by full-scale Cybertruck production and new, more affordable models. So these initiatives are intended to stabilize and potentially grow demand amid intensifying competition, especially from Chinese and legacy automakers. So the successful rollout of full self-driving technology and expansion in energy storage and solar products could provide additional growth catalysts. Now, However, keep this in mind. However, Tesla continues to face margin pressure due to price cuts and competitive dynamics, which could weigh, on profitability in the near term. Okay, so forecasts for Tesla stock in 2025, they vary widely, reflecting the company's volatility and the uncertainty surrounding the growth trajectory. So mid 2025 price targets range from a bearish $216 wallet investor to a bullish $555 stock scan. Okay, so end of year projections are even more dispersed, with the highest bullish target at $786 roughly, and the lowest bearish at $218. So that's what I have for you today. Please take a moment right now to hit that subscribe button and the like button. If you want more videos like this, if you appreciate this content, let me know that by hitting that subscribe button and the like button. I appreciate your viewership. Stay safe. See you on the next video.